Here is a video explaining the analysis that I did earlier on gold and the current situation. So at around about 9 a.m. we were looking at gold. So let's rewind to then. Okay. And what we were acknowledging was the fact that today in Asia, this is the Asian range. Let's fast forward a bit. So we've got the London range as well. There's Asia's high, Asia's low. Right. So the fact that we took out yesterday's highs in Asia over, I don't know if we did it at the start of the day. I think we did. Right at the start of the day. Okay. So we closed and then immediately we broke the high of the close. You can just about see it. I mean, if I zoom in, you might see the wick. So it's not a substantial break of yesterday's highs, but we're sticking to a rule-based methodical approach. And therefore, if we break out of the highs and can't stay out above the highs, bullish, then if we come back inside of the highs, that's bearish. So that gives us a resistance structure for the day. So long as we're below that level, yesterday's highs, we assume we stay below there. So why buy anything that is likely to stay below those highs and not give us much potential for a trade? Bullish. Okay, so that's the thesis, that it's bearish. So we've got a fake out high, FOH, on the daily time frame. So it says it on the chart, fake out high, daily fake out high at the previous day's high, pdH. Fake out high, bearish. And then when we come into our session, New York, we're looking at not only yesterday's highs, we're looking at Asia. So it's quite a big range in Asia there, soaking up pretty much all of New York's rally. So nice stop hunt into New York's rally. And then therefore that gives us a bit of a bullish scenario, given that we've already done a stop hunt. We've come into support at the inside day lows of Monday and also last week's highs. So long as we stay above that support of Monday's highs and last week's highs, then there is a case for the upside. But the price would need to get above yesterday's highs. So I'm not looking to do anything with gold until we break yesterday's highs. If we break out of yesterday's highs, then that will be very bullish for a continuation. And we can buy the breakout depending on price action and how the price behaves. But if we get bullish structure on the other side of yesterday's highs, it's bullish. Meanwhile, if the price in New York can't get above London's highs and then breaks below the support structure, then we've got a bearish case, haven't we? Because we've got a fake out high on the daily, and then we've got a price that's breaking below the support structure, and there are prospects of a move below Monday's highs back through the range of yesterday in a distribution situation, right? So we've rallied. That was a fake out of last week's highs, fake out high. Okay, on the weekly chart, if we're below last week's highs, just like we've got a fake out high on the daily chart, if we fail to hold above last week's highs, that's a fake out high. So we've got the time frames aligned. Okay, the weekly and the daily chart aligned bearish. So it's a reversal, a bearish reversal context. All we're now looking for is a break of either the lows of London, and that will give us a multi-time frame bearish continuity alliance, and that gives us a bias, and we can start looking for a short and how to get in on that depending on your rules, how to get in on the trend. So we're looking for a breakdown at the moment of the lows of Asia and London. Okay, the lows of the day. We've got a triple bottom low, so it could well act as a nice support area and structure. But if we get below it, so if we get below that triple bottom, then that's looking very bearish, isn't it? We've got all the time frames aligned. We've taken out the triple bottom, and momentum is with us to the downside, and we can target the downside. So that's one way we can trade it short. We can't trade it long until we break yesterday's highs. The only option we've currently got is looking for a short while we're below last week's highs and yesterday's highs. So let's forward play, keep going. Now, as we break above last week's highs, then that's less bearish. So let's see if we can do that. So far we're below them. Now that we're back above them, that's less bearish, but we're still fake out high on the daily chart. So we can't look for a buy. We haven't got any signal from the Trend Predator Pro. There's no momentum, no trend. We are stuck between last week's highs and yesterday's highs. So it's like a sandwich. It's not going anywhere, right? So we don't want to trade inside of a sandwich. You want to trade outside. Right, so now what's happening? If we come out of replay mode, now what's happening is currently we're above last week's highs, which is good if you're looking for a buy, but we still need to get above yesterday's highs. What could happen is if we come back inside, which is what I posted a moment ago and asked around on this channel, if we come back inside of the London highs, that actually gives us a bearish signal because we've got the daily chart and the 8-hour aligned bearish. It will be a fake out high. So if we go back to, let's go on a, no, we're not going to be able to do it. But this, when we broke out and then came back inside, it was flashing bearish. I've shown you that on the chart already, which I've posted. This indicator won't, it might do on the 3-minute. No, I don't think it will. No, we're not. Well, over here maybe. Let's see if it gives us, shows us the bearish. So as you can see, this candle here, right, the indicator is not going to do it because we're in replay mode, but this here is a fake out high. So we've got a fake out high on the 8-hour and the daily, as well as the 4-hour. But just those two alone, that actually gives us a bearish signal because we've got 2 time frames aligned, higher time frames. Any alignment, this is based on the 8-hour and above. So if we get an 8-hour and a daily aligned, that will give us a signal. If we get an 8-hour and a weekly aligned, that will give us a signal. Okay, so the 8-hour plus another higher time frame will give us a signal. And in this case, it will be a short signal. However, since making this video, we've broken back above that London high. So we're not looking as bearish now. What we need, as I said, we need to get above the highs of the day, and then we'll have everything bullish. So if I flip over to give you an context, which I actually needed to add it to that trade. If you look at this chart here, if we go to 5-minute, if you look at this, at the moment, it's looking quite good because we've got a breakout on the daily, so we're above yesterday's highs, which is here. So yesterday's highs. We're inside of last week's range, but we're above the previous week's highs over here. So it's bullish. We're also above last month's highs, bullish. So this is what we're looking for. We're looking for time frames to align, and that gives us a bullish context for which we can trade. And then according to your rules, so here I got in a bit early. In fact, let's look at it over here. Here I got in a bit early and I was under pressure. But now that we're breaking out, not quite, but not there yet. But if we break the highs, I've got an alarm to add to the trade because we're in breakout of not only yesterday's highs, but also the Wall Street highs. And this is A, B, C. I'm looking to trade the C leg. I've already got in early, but I'm looking to trade the C leg breakout. And I hope that makes sense. I'm doing a webinar later on, so we can go through some questions there on all of this. If you want to try and understand the way that I approach the market.